Hey guys, DSF. This is going to be Chapter 8 of Chapter 8 Mr. Market is the nickname for the intelligent investor. And the reason I'm doing Chapter 8 by itself is I took down the other videos I had with some bad quality, and I was going to pick a few spots on Intelligent Investor to do other videos. And Chapter 8 is Mr. Market is one of the most important in the book because it gives you an understanding psychologically and financially that if once you understand this chapter as an investor, you're on a different playing field and you can really make smart decisions. Because in any market, this chapter will help you. And one of the main things that I feel in this chapter is, once you read it and understand it, is the worst thing you can do is buy something that at a high price. Because what you end up losing is your most important resource, which is time. And Mr. Market will give you opportunities to buy too high, and it will give you opportunities to make a great deal and buy low. And it's not always the easiest thing to buy low, and because it goes against a lot of it makes people feel uncomfortable. And Jason Zweig kind of pointed this out about this chapter, that people put more money in their 401ks when the market's going up, and they put less in when it goes down. And that's because everything around you you're hearing is fear when stuff goes down, that you're just going to lose more money, and when stuff goes up, you're just going to make more. So this is where this chapter is very good. Graham breaks down a lot of stuff, a lot of different things that investors do wrong, do right, and you can learn a lot just basically by understanding this chapter. Not just reading it, but understanding it. I like the summary sentence that he said: the most realistic distinction between an investor and a speculator is found in their attitude toward the stock market movements. And this is really true. Most of the time a speculator, he's looking at short time span. And an investor is looking at a little bit longer, but an investor also doesn't really mind when prices go down if they're accumulating. And that's where, like, a speculator, sometimes, it depends on which direction they have their trade or something, that they're in and out of the market. Whereas like an investor, technically, for instance, I'll put myself as an example, on some of these dividend stocks, these good companies that are having great earnings, great dividends, I mean, a $1 and $2 move here and there, it doesn't really, bother me or nothing. Of course, if there's like a 10 or 15 or 20% move and nothing has changed, that's where being an aggressive or thinking for yourself kind of investor with Mr. Market has give you a great opportunity. But if the company goes down for different other reasons, you have to take that into account. And the best thing Graham said in this chapter was, don't buy a stock immediately after it's gone up, and don't buy a stock immediately after it's gone up, and don't sell a stock just because it's gone down. And you have to figure this out, and you will figure it out over time being an investor. So like I said, guys, the worst thing you can do is buy something at a high price, because you lose that precious resource, time. And it's very easy to buy something that's undervalued. You just have to find what the fair value is with the cash flow and wait and buy it when it's lower. The hard part is people deciding when something's overvalued, or being able to value something after they buy it. And this takes a little work and time, but this is why Chapter 8 is a great introduction, and it's a great tool for investors, getting on their feet and learning a lot. So that's why one reason I really recommend this chapter. And going through, Graham really breaks down many different things in the bond market, in the stock market. And if we really think about it, what Buffett, when he first went after Graham was all about finding cigar butts, so undervalued companies, and selling them when they hit a fair value and stuff. I mean, there's more ways to invest, and that's shown, over time. But this Intelligent Investor Chapter 8 will give you a background and basically about understanding how market movements are and your psychology within these movements. So that's why, guys, I really recommend this Chapter 8. and share your thoughts. And talk to you later. DSF.